So, hello, it's Toby at the On-Chain podcast. We're joined here by us, Sultan. How's it going, Oz? You all right?
Yeah, not too bad. It's a little chilly here on the East Coast, but kind of settling into fall.
Yeah, winter is on its way. It's been raining quite a bit in the UK today. It's been like torrential. But look, welcome to the first episode. So, really was really pleased actually when we managed to get you on board. I know we've spoken on a couple of times
Yep.
over the past. The one of the main reasons I was so keen to get you on board was essentially due to your understanding of tokenomics, RWAs,
hmm
all things crypto, but in particular from like a kind of a security standpoint as the optimistic crypto standpoint. So I suppose before we go into too much, do you
hmm
want to just give us a bit of a overview about yourself?
Yeah, sure. As Sultan, I've been in the space since 14, I guess. So about 11 years. I've worked on about 30 different token launches. I've been interim CEO for a couple of platforms. I've built trading tools. We've built trading platforms. Got into RWAs really about 2018. And a lot of this was land provenance and things like that. So it wasn't really called RWA at that point. I've been working with a number of startups that are moving into that arena. And then I've been working with a number of partners from Saudi Arabia to Dubai. I've done some advisory in the state of Rhode Island on their crypto legislation, and I, kind of keep abreast of what's going on with a lot of the crypto coalitions around Trump. It's an interesting space right now, because like RWAs seem to be picking up, but the mainstay of what people are buying are tokenized stocks, which is interesting. But it's also interesting that the people that are buying them are largely hedge funds and your Black Rocks and your Blackstones of the world. Um, so it's again very sort of closed circle as to what you're seeing inside of the overall financial industry. And then there's this huge rise of stable coins, right? We used to just have USDC and USDT. You've now got World Liberty. You've got several dozen coming out of the European Union. You've got ones coming out of Asia, and they're all really kind of getting to this sort of central thesis, which was, I guess you'd have to go back to like what IBM Hyperledger was doing with Stellar several years ago. I always use this example. It's a stupid example, but I use this one. Toby, let's say that you own a dairy farm in Wales, right? And
Sounds pretty good.
I own a cheese factory in Germany, and this can of mango buble is in Sweden, and it has a grocery store. Well, typically, one of the issues that the stablecoins sort of are sorting out now is that, if you're in Wales, you'd be going for, I believe it's pound. I don't think they're within that euro continuum, but you go from pound to euro, right? So immediately you're taking somewhere between an 8 to 20% hit on the currency transaction just in between banks and between countries for me to buy that milk from you, right? Because I want that A2 milk. Then I make my cheese in Germany. I go to sell it to Sweden, I now have to go from euro to corona, right? And so again, another 8 to 20% hit. That's just in the currency exchange. That's not including additional costs, VAT, other things that I might have to think about inside of this ecosystem. And I think one of the greatest things that stablecoins kind of bring to the table is that you send me an invoice in Stellar, I pay you in Stellar, I send the supermarket an invoice in Stellar, they pay me in Stellar. So now, immediately as the producer, in this case you of milk, me of cheese, we're immediately, improving our bottom line 8 to 20%. In addition to which, we now have something that's a uniform currency that we can use at least within whatever this ecosystem is that we've created for whatever sort of product that is. This has more cascading global impacts when we start looking at currency volatility for the purchase of things like oil. This also has huge impacts when we start looking at what the BRICS are doing. For those of you who aren't aware, that's Brazil, Russia, India, and China. who've created this union, this financial monetary union, where they're trying to get off of the dollar. At the same point in time, we've got movements in the United States that are trying to put the dollar back on a gold or silver standard, right? And then you've got that quizzical question of what's going on in Britain, because you've got, the digital pound, right? But there's two questions. Question one is, are they going to maintain the thesis of sterling, right? Because that gives you kind of a fiscal backing to this. Or are they just going to go to virtual money, which has less confidence behind it? And if the United States adopts sort of a gold currency, there's that bigger question of, what does that do for you guys? Does that devalue your currency? Because I know what Ursula von Leyen is proposing for this digital euro. That sounds like something I wouldn't want to spend. I don't want people to know where I'm spending it per se. I don't want to be tracked. I don't want a 15-minute city. And, I don't want you saying that I can't spend my euros or digital euros here because you don't like something I said on X or what was formerly Twitter, or, I have social commentary that perhaps you as a government don't agree with. And I think that's the world that we're moving into, is that there's CBDCs on the one side, which is like what Ursula's talking about. There's new digital currencies on the other side, and then there's asset-backed ones. All of this radically stands to change the way that we look at money, very similar to what happened in the U.S. when we went off the gold standard in the 1930s.
Yeah, it's definitely an interesting short period ahead of us, isn't it, with respects to everything that's happening. I mean, you kind of alluded to it a little bit there. So I mean, the kind of topic of discussion today, really, if you was to kind of encapsulate in one title, would be stablecoins. Are they worth the hype? So we kind of alluded to a little bit of that there. So I mean, in terms of, if we was to talk kind of cold hard facts in terms of what traditional finance is, and what marks stablecoins out as the differentiator here, there's been terms that are flowing around like it's the next gold rush, for example. The fact that it enables primary use cases across payments and remittances, and DeFi a lot more of a kind of, it's a lot easier to do that. Where's your standpoint on that? Do you think there's legs in stablecoin as opposed to kind of traditional crypto?
There's legs, and I think it's on three levels. But let me ask you a question. If I were to open a savings account in Britain right now, what percentage yield are they promising? Like, what's the bank promising you? Like around 1%, 1.2%?
Yeah, I mean,
like
I wouldn't know for sure, but it's pretty low, to be honest. Yeah.
So, on utilizing stable coins between Coinbase and a variety of other providers out there, immediately you have somewhere between 1% to 4% in rewards just for spending it, right? If you basically, it's not necessarily staking it per se, but if you lock it up and you allow them to lend against it, you can make more than 2% on what your investment is. So just out the bat for consumers, that's level one. There's a better fiscal incentive for utilizing the stable coins in terms of how you traditionally use money within a banking ecosystem to just make some money for having your money sitting there.
Right.
The second piece of this is international remittances, which again affects consumers. So Western Union gave a statistic last year. It was something like $40 billion leaves the United States annually, with people just sending it back home. Right, so that could be Latin America, that could be Asia, that could be the Middle East, that could be Eastern Europe. That could be a variety of different places. That could also be Britain or Ireland, if people are helping their parents out or that sort of a thing. But those remittances are hit with some pretty high fees. If you send it via Western Union, you're immediately getting hit with somewhere between a 5 to 20% fee. It's usually somewhere around 10 or 15%. So if I'm sending $100, $10 is fee, right? Then I also have to deal with a currency exchange rate conversion cost inside of that, which is another fee. So if I send $100 to Mexico that has to be converted into pesetas, I might lose $14, right, on that transaction. But I've then sent over about $86 worth of pesetas. I think when people start realizing that by utilizing stablecoins within these ecosystems, and you're also seeing this now in Latin America. I think there was one country recently that had a printing shortage. This happens every couple of years, where it's either a printing shortage or someone says, "Hey, wait, the price of this currency is going down to the point where it's worth more as the metal than the currency," and they just collect all the coins, ship them out of the country, melt it down. Um, this is a good hedge against those types of things. This is a good stability against those types of things, and this is also a good hedge against kind of like your local currency going sideways, right? Which does
Right.
happen in a lot of these emerging market, what we used to call third world countries. Um, so that's the second piece of it. The third piece of this, I think, is what we used with the dairy example. International trade finance, international capital finance. And then the other thing to keep in mind is that, if you hold certain digital assets, you can lend against them almost immediately, right? And that's very different from what you have to go through if you even have cash collateral in the United States, in Europe, and I would say most of the world. In most of the world, you could have cash collateral, but it's not a guarantee that you're going to get a loan. It's not a
Right.
guarantee that you can borrow against that. With crypto, I mean, pretty much every exchange now, or I'd say the good ones, as well as a bunch of financial providers, all allowing you to have all of this liquidity that you didn't have within the traditional financial markets. And so that's what makes it more interesting. The problem is just that learning curve, right? Because I'm Gen X, this is something that even digital natives in like the millennial age have a little challenge with, but like lower millennials, Gen Z and Gen Alpha, they're natives to all this stuff. So I think that the challenge is going to be going top Gen X and above into the boomers, and like how do you get people to accept these things? But things like World Liberty Financial, right, which is Eric Trump's company, which launched the World Liberty token, but then they launched World Liberty stablecoin with BitGo off of the BitGo platform. There's a stablecoin, that can be used inside of other vehicles, and a lot of these are going into niche communities or political communities or things like that. That's where I think there can be a lot of proliferation, and there's a lot of utility for this.
And are these essentially, is it like fully fiat backed, or are these like more algorithmic and crypto collateralized that you think is going to be the route? Which route do you think is going
I
to
think
be the
you're going
most
to get a
beneficial?
mixture of things like USDC and USDT, which are actually asset backed, so they're backed by a
Right.
treasury. World Liberty has said they're putting a treasury together. I haven't read the tokenomics on it, but I've talked to the folks at BitGo. Um, they're looking at that kind of a thesis as well. But there's other cryptocurrencies out there that aren't fully backed, like Stellar, right? But they're utilized within that paradigm in the same manner and fashion, simply because you now have it's like the term lingua franca, right? You have something that everyone understands financially that's all the same. So that's where I think there's a significant value and upside.
Yeah.
Not just for people, but I think for businesses, as well as anyone who really kind of wants to get into this ecosystem.
Yeah, I know. Look, I mean, we're seeing, like you mentioned a couple of moments earlier, a lot of the big players are really starting to, turn their heads now and take the crypto space a lot more seriously, aren't they? And push towards their own backed coins and tokens. In terms of the market as a whole, then, what are the issues that you see on the horizon between the stablecoin side of the fence and the CBDC's side of the fence? And I suppose how do these two need to come to meet ahead to make things happen for any particular market in comparison to the other?
So I think the challenge that you're going to have with CBDCs is that Trump has basically said that he's not really keen on
Right.
these things, right? And that really raises a huge challenge. And that challenge is how are they going to work? How are they going to function, and at the same point in time, are they going to be putting capital restrictions on you to do stuff with them? And I think if what Ursula von Leyen is talking about comes to pass, or even within the UK, things happen with the British pound, the digital pound, and they start putting restrictions on how you can spend it, where you can spend it, what you could spend it on, or if it becomes politically motivated, I think you're going to see movements from the State Department and the Fed saying one of two things. Either we don't want to work with your currency, or two, because you're not upholding certain standards of freedom, we're going to put a premium on utilizing your currency, which means that it'll be more expensive, right? And these are things that we don't see in the traditional currency markets, because currency is currency. You can spend it however you want. You can take it wherever you want. You can do whatever you want with it. Now, with this whole track and trace that you're going to have, as well as the federation of a unified digital ID in the United Kingdom, as well as one in Europe, and then now the Europeans saying if you want to travel after March 2026, we're going to have biometric data on you. I mean, it's a little onerous, you know.
Yeah. And is that really the kind of the governance structure you see as overarching, which is coming in across? I mean,
For
certainly.
CBDCs, yeah. For CBDCs, it's pretty challenging. For everything else, you know, it's free play, it's tracked, and they want to mitigate the impact, I guess, of crime and those types of things, and that's really kind of a big push for this as well, right? If we can take the capital out of the hands of criminals, you know, we can stop crime, is their idea. I think what they fail to understand is that we've had this issue with currency. You'll have this issue with digital currency. There are digital currencies like Monero and its derivatives that are less traceable. And there's also the problem of barter, right? Because you may not necessarily physically transfer someone Bitcoin, but this is a dongle, not a drive, but I could have a drive and I could have, you know, 100,000 USDT on here, and I could just hand it to you. And so now you've been compensated 100,000 USDT, and it breaks that track and trace framework that they're talking about. So I think a lot of these things are still, you know, interesting ideas. I don't think they've got the best in terms of intentions for, you know, freedom of populace, but they definitely go alongside with what some of these World Economic Forum ideas are of, you know, population management.
Yeah, I'm going to switch these questions around because we're in this space now. I mean, what I was keen to know is, you know, what regulation, if any, stablecoins have in place, and you know, to encourage like a safe growth. And it sounds like maybe a growth which is a little bit more led by the economics as opposed to whoever's pushing the stablecoin is what we need here. Is, you know, what would you suggest as being sensible steps to work towards like a regulated, safe environment which encourages, of course, the growth of stablecoins, and really kind of works with the investors for that.
I think it needs to be threefold. I think it needs to be, number one, you know, the token has to have good tokenomics behind it. And that's the economic modeling behind it, including the treasuries, right? And if you have a stable coin, your stable coin should have a treasury, whether it's propped up by an associated allied token like World Liberty, or if it's like USDC or USDT, where it's propped up by holdings of cash and holdings of Bitcoin, right? Which, you know, are almost a one-to-one for those tokens. I think as you see things like the digital yuan and the digital ruble and these things kind of coming into the mix, there's going to be some questions as to the validity of those currencies, vis-a-vis, you know, like, is it actually back? Can we verify it's back? Can someone audit this? Is there a third-party audit capacity? So I think there's going to be challenges with those, and there's going to be trust issues. And I think secondarily, after we had that, you know, whole Do Kwon thing, right, with Terra and Terra Luna, there's a lot of people who are going to be skittish about, you know, what exactly is the mechanics behind this and who's auditing and who's verifying it. So, you know, I think we're going to get to a standard of verification and audit on an annualized basis. I think the second thing is proliferation of these within payment systems. You've got some payment systems now You've got an uptick of debit cards that, Coinbase, I'll just use it as an exemplar because they're easy, but you also have Kraken and a couple other exchanges where they'll issue you a Visa branded card, and you can put, your Bitcoin, your Pepe, you can put whatever you want on it really, and you can spend it just like cash. And what's interesting about that is that allows you to arbitrage crypto for cash. So there's scenarios where it's like, I mean, I've gone out and I'm like, oh, okay, maybe I'll just buy this in Dogecoin because Doge is going up, and so I've actually given myself like a 20% discount in whatever I'm buying. But not everyone thinks that way. And then the third, I think, is that you have to appeal to the Luddites, right? There has to be a simple way for I'd call it non-seed phrase custody with wallets, and also for bank custody where people can, look at literally the same way that you would say, okay, I don't know how it is for you guys overseas, but maybe you have a pound, you have a pound denominated account, you have a euro denominated account because you go back and forth to Ireland for whatever. And then, you would just end up with other denominated accounts below that, which would be for the different cryptocurrencies you hold. And then potentially you could use the same vehicle, which is just swapping it out with your debit card for what you want to spend. That, in my mind, is the easiest way to do this. But what we're seeing, because I do some of that consulting, and, we work on Oracle systems, and we've worked in old banking systems, and I've worked around banking for about 20 years now. Some of these banks are way behind the times. And some of your Commonwealth countries, those are, British Union type countries, they're in some really backward systems. Like, to send money to Australia, I almost have to be using like almost an old telex type system where I need regular wire information, bank and routing, but then you need an additional code which is associated with that bank, which really only used to be on a telex system. And I'm going to tell you that anyone listening who's under the age of like 40 probably doesn't even know what that word means.
Yeah, I was going to say that's straight over my straight over my head there.
But this is what you're dealing with from a technology perspective. Is like you're still dealing with a bunch of dead tech that's out there, and that's running your banking systems. And the more and more you get into developing countries, they haven't upgraded to Oracle. They're not running new systems. They're not fully integrated. They're not up to speed. And you have to think about ISO 20022, right? So the Fed in July of this year started this move to basically switch over from the SWIFT system as it was into just using a set of authorized cryptocurrencies for financial transfer. So what does this mean? This means that by 2027, because there's a 2-year cliff on this, if your bank in your country hasn't upgraded to these new software standards and can take money that way, you might be an island. You might just become isolated inside of this. And so that's really the last point, which is, it's not just the stable coins that need to be considered from an adoption perspective. It's the fact that the whole world is changing. The policies are changing. The guidelines are changing. And the way that we transfer money is changing.
Yeah. So, I mean, it almost could sound like that if we was to head down the KYC, AML kind of, regulatory standpoint, it could almost be like walking through concrete to for a lot of these countries to get things up and running because they just don't have the infrastructure there in the first place.
Well, that's kind of the biggest thing. And, I think the big challenge that's going to occur in the next year is that everyone's going to start waking up and realizing that whether they like it or not, they're going to have to adopt some sort of a crypto future. There's rumblings right now that with the 250th anniversary of the United States coming next year, that we're going to issue a new bill that's very much like your secure bills in Europe. And that they're going to be deprecating a lot of, these older money supplies that were out there. So you could probably look at the fact that like governments are going to start redeeming old currency, right? And everything's going to start moving towards this. The big question just becomes, what's the timeline for shifting over to full digital? Is it this decade? Is it next decade? I think it's partially this decade, but I think if we get to 2032, I don't think that there's going to be much that you're going to be using physical cash for in the same way that you use physical cash today. I think it may be where, you go to smaller towns, rural areas, things like that, cash is still king. But I believe that the way that the policy is coming, specifically from Washington, also from London, also from Zurich, also from Dubai and Riyadh, that this is ostensibly where we're going to be in a couple of years. We're just going to be full digital. And I think everyone needs to prepare.
And where does, like, I mean, if we was to give like a hard, evaluation of the blockchain at the moment and where we're at, I mean, it's not going to happen. But say, for example, devil's advocate, tomorrow we press a button and everyone's digital. What, is the infrastructure even there for even established, crypto, or crypto friendly countries, should we say, like maybe the LATAM region, they're quite
crypto friendly countries on the federal level, yes. For crypto friendly countries on the bank level, maybe. It's like,
in terms of the technical advancements that we need to make, is it a case of the infrastructure is key now for crypto and the blockchain as a general, as opposed to, we spoke about earlier, remittance based work. I know a lot of these remittance companies are such high volume and they're really kind of going after these big numbers, but the reality is to earn the money that they're all looking to achieve, they need to have those high numbers, and a lot of them don't have the infrastructure in place. So is it going to be a case of everyone kind of jumps on the stablecoin or fiat-based platform, and these systems start to crash, and then people, it leaves it open to hackers? Where does that leave people?
I think it's going to be like, trying to think something that'll track for a metaphor that'll track for the European audience. It's kind of like going from, you used to shop at Woolworths to now you're shopping at like Albertsons or something like that, right? I think that's really what you need to think about with it, because a lot of these platforms, sure, they can upgrade them, but it's going to take them a long time. Okay, and we're not necessarily talking just like 12 months. We're talking some of these platforms could take up to 5 years to upgrade, right? So there's conscious business decisions that are going to have to be made by banks in terms of, do we deploy something short term and migrate these customers over to that new platform? Do we do a full system upgrade? How are we doing this? I think a lot of it's going to be piecemeal at first. Secondarily, I think you're going to run into a big problem with these monetary transmitters because, in the Middle East you have the Hawala network, right, which allows you to literally go to like a guy, you pay him money, he takes a fee, and then another guy in another country is facilitating that currency transfer. You have the same thing in Latin American countries, which is similar, it has a different name, but then you have the wire services like a Western Union. I think Western Union and those types of companies, if they don't innovate and if their fee structures don't reduce over the course of time, are probably going to become dinosaurs. They're going to become that Woolworths that you don't shop at anymore. I think that's the first big shift. The second is that this could affect banking. Why am I keeping my bank accounts with this bank that can't do 50% of what I need it to do, right? In America, we've got Zelle and other payment systems that, allow you to literally connect to your bank and pay people and send things almost instantaneously, and generally at least wire speed, and that's for transactions up to $5,000. It's for larger transactions. There's the big question in those. There's also in Britain, you guys are getting deposit holds on a lot of things, right? So if you go to your bank right now and you're like, "Hi, I'd like £5,000," and they're like, "What do you need £5,000 for?"
Yeah, I think you're not even allowed to bring in over 300 quid in cash. I think, if I remember rightly, the last time I went to a bank, you had to have a reason.
Yeah, well, why are you bringing this much cash in? I'm like, I work at a bar. I got paid. You know,
Yeah.
this is how people pay for things. But it's a very strange era where we've gone from that free for all with what money was, and then the exuberance of the 70s and 80s in Britain, where you had the whole euro dollar trend, right? To where we are right now, which is really sort of strange and onerous in terms of like what you can or can't do with your own money.
Mm. And that you kind of mentioned where I was really keen to kind of wrap things up and get your thoughts on this. So obviously I'm here in Bristol. You're over there in New York.
New York.
You guys are. I think with the Genius Act and everything like that, you are really kind of flying the stablecoin flag, if you like,
Mm-hmm.
and making big inroads. I'm a little bit concerned, really, in the UK in particular, and obviously Europe. We're kind of bogged down with legislation with regards to that. Where does this leave us? Just yeah. I mean, we're what, 3, 4
We're
years?
probably going to continue to drive a policy perspective that is more freedom loving, I guess I'll call it, because we are
Mm,
American, that is less track and trace on transactions. But, we've seen this infrastructure that came from the Biden administration, like trying to stick the IRS in transactions under $600. You've had a big shift in terms of how both America and Europe are treating China. Okay, and you're like, why does this make sense? Well, Shein and Timu, which a lot of people buy stuff from, France is about to block Shein from the country.
mm,
Okay, so a lot of these smaller dollar transaction things that we're thinking about, where you could just buy something from another country and have it shipped. There's tariff considerations, there's monetary considerations that may become a thing of the past, right? So I think that's consideration number one for consumers. Consideration number two is your bank up to speed? Can they do what you need to do? And also where are your investments, right? Because crypto is not just stable coins; it opens a whole new
mm.
field of potential investments for people to get into, and that there's an education curve that has to happen with that. And then the third, I think, is what is really the linchpin of this. It's cross-border payments, and those
Yeah.
cross-border payments are, like, for example, the Chancellor of the Exchequer probably has some agreement with France where Britain is lending France money on an overnight basis, and those remittances are going back in pounds and euros. Well, if we can stabilize this to one stable coin, they're paying less in fees, because when we talk about overnight remittances, we're talking billions, if not hundreds of billions of dollars that are paid back and forth for things like France has to make payroll for the country. They don't have, they're short a little bit. They borrow it from the Chancellor of the Exchequer, or they
Mm,
borrow it from our friends in Germany, right, at the European Central Bank. All of these things become more simplified, and they become less costly. But that's kind of how the crypto ecosystem is sort of factoring into all this.
yeah.
I think there's a big opportunity for people to save money. I think there's a big opportunity for them to invest wisely. Obviously, none of this is financial advice. Um, but I throw that disclaimer out there.
Yeah, you gotta get that thrown in there.
But I think it's a good opportunity for folks. I think some of your AIs might be able to provide you some boilerplate education on this.
Mm,
But I think the rest of it is do your own research and figure it out. It's just this is where the world is going, and I think it's incumbent upon us to take note of this and figure out how we play inside of this in a better way.
mm. And do you see it being like more of an adoption of like L2 blockchains, or is it like the kind of more traditional like Ethereum, for example, leading
It's
this way?
mostly going to be L1s, and I don't know if you saw, like, I like Ethereum and I like Ethereum tokens, but I don't know if you saw this like recently. Ethereum took a big whack, right?
Mm,
And that big whack that they took was in gas fees when the network got crushed inside of like a 24-hour period. You're still going to have those challenges. I think L1s for your stablecoins will be here for a long period of time. L2s are really L2s. The easiest way to explain L2s to someone who doesn't understand this is L2s are like your wire service for money. They are the faster way to conduct transactions and transport information and settle information in between multiple parties, one party and another party, or one party and many parties, right?
Mm.
However, this is, however, you're paying for things, whatever you're buying, or if you're paying people. Uh, that's that's kind of where I think we should probably, yeah, L2s, that's a whole conversation to itself. On Bitcoin,
Yeah.
it's the Lightning Network. You've got multiple L2s that are developing for Ethereum and Ethereum chains. A lot of this stuff is coded in Cosmos. There's a huge opportunity there. But I just think without standards and without critical adoption by banks and central banks, it's not going to go as far as we wanted it to. Because I've been talking about Lightning since 2018.
Right.
And
Yeah.
outside of having a Zeus wallet and showing people how fast it goes and being able to do other stuff with it, it's a novelty.
Mm.
It's not there yet. But I do think by 2030, 2032, you could easily be seeing your L2s there in a big way, because now we're moving vast sums of money and we want to do it quickly.
I was having a chat with a chap the other day, and he said something that was really poignant. I think he said, I can't remember exactly, but it was something along the lines of, "Look, I've got my time to market fit wrong twice. I need to be careful moving forward." You kind of mentioned it a bit there. If you're too early or too late in this game, it can really be detrimental, right?
Well, that's exactly it. But I think you can never be too early in terms of just grabbing some token and sitting on it. Okay, I would obviously stay away from what we call like extreme altcoins and shit coins.
Mm.
I would look at the breadbasket of the top 100 cryptos that's out there, and I would do your own research and base it upon that. The same thing goes with stable coins, right? Look at where you are in the world. Look whose stable coins make sense for you, because not everyone's denominated in dollars or pounds or euros. They're denominated in a variety of different things, and there's other stable coins. But make sure that the thesis behind the stable coin is sound, and make sure they have some sort of treasury capacity. Because if they don't have those, and something happens and the project crashes, you're left with nothing.
Mm.
And that was the experience at Terra Luna. This whole industry has been a growing process. We came into this with the Howey Act, which was passed in 1934, right? That's how far back we have to go to start looking at these things. And the new regs are coming, and the new policy is coming, and a lot of it's being driven by us in America, but a lot of it's being driven by Vara in
Mm.
Dubai, and a lot of it's being driven by the Swiss, right? I think the British are in a position to catch up and really kind of lead for the European Union. And I think the CBDC overtures of Ursula von Leyen may get some significant pushback, specifically if it's found to. I'll give you an example. Germany doesn't seem to like AFD for whatever reason. I'm not going to get into the politics, but they're a little bit too right leaning for some people. If Germany were to say we don't like what AFD is doing and we're going to turn their money off with the CBDC, I think you're going to have some riots or revolts. I think people are
Mm.
going to be upset about that. So the implementation of these things with those guidelines and controls that they want is really where you have a big question in between. Does this become a new financial system, or does this become V for Vendetta?
Right, yeah, yeah. It's a fine line with major changes, isn't there? You've got to kind of eke it into society as opposed to just a kind of a hard line crash into things.
Yeah.
Nice. I mean, look, I was really grateful for obviously taking the time out. I think we mentioned a couple of times in the past. Let's get a couple of chats. So I'd be really keen bit further down the line to get you back on and head in another direction. Obviously, that's the great thing about the blockchain. There's so many different areas to speak about, but maybe around kind of digital custody, something with that space. I mean,
I would be delighted to do any of that. I apologize. I just have an interview that's coming right after this one.
yeah, no
Um,
worries.
but I would be delighted to do that. I just think the more knowledge we can impart to people. Look, you're in a country that's terrified. Okay, you're terrified of fucking foreigners. You're terrified of your own government. You're terrified of the lapses in policing. And, at the same point in time, you've got very, very weak politicians, and everyone seems to want to say everything's fine and sweep it under the rug. So my heart goes out to you guys, but like that has to get sorted out. And throwing a new currency into a mix like that is,
Yeah.
that's kind of.
Yeah, it's just take the pin out and just throw it behind your head
It's
kind
like,
of
but
scenario,
wait, I
isn't
know
it?
you're all pissed off, but hold on, there's more. We're gonna mess with
Yeah,
your money now. That's
that's it. That's the one. That's the one way to really piss people off in this world is mess with what's in their pockets. Well, look, what I'll do then, we'll circle back and look. It's been great to have this chat with you, and look, really appreciate obviously giving me the time of day and come on. I've learned a lot. I've been scribbling loads some notes. Good thing about my notes is that only I can read them. Really, my writing's that
no,